Hey, what is good everyone? It's Cam from Cog here, and today we'll be talking about my favorite 3 ETFs that you can buy right now in Australia for long-term growth. If you guys know anything about ETFs, they're for long-term growth, okay? They might not go crazy up and down sporadically like cryptocurrency. You're not going to make 100% in a year. You're going to consistently get a good return. Now, these 3 invested in, full transparency. This is not financial advice. Don't do what I'm saying. I'm just telling you that I like these 3 ETFs, and if you want to do what you do with that information, then that is up to you. Now, you can buy all these 3 ETFs on the comsec Pocket app. I have another video on that app. It just means that you can get $2 brokerage fees, which is really good. If you're trading on comsec, I believe it's $10. You can also, the minimum amount's only like $100 or $50 or something like that, I believe. So you can get in a lot cheaper. I wouldn't recommend doing that. I still recommend putting like at least 500 in at a time. And also, before we get into the video, the time in the market is always better than trying to time the market, okay? So even though the market is really low right now, it's a good time to get in my opinion. Don't take that as law, because it could drop down a lot. But if it drops down a lot, then you keep buying. If it goes up, you keep buying. It's always a good philosophy to go by. But the first stock we have is the ASX index SYI, which is the SPDR MSCI Australia Select High Dividend Yield Fund. So this fund is pretty much all like Australia's top stocks that give out high dividends, which is most of Australia's top stocks. What a lot of US stocks do is they like buy their own stock with their profits to like inflate the stock price, where Australia's stocks just prefer to give out their profits as dividends, which means that Australian stocks won't go up like 20% a year like some tech US stocks do, but instead you get like a 10%, 8% dividend, which just means they're giving you 8% of what you invested back each year as their profits. Say like, thank you for investing. Now, this stock has a 0.35% per year management fee, which means it's just going to take out 0.35% of the total stock price a year, and that goes to the company that runs the ETF. It could definitely be a lot worse. Some management fees charge like 2%. Some charge like 0.1%. They're the good ones. You get more in the US. We can't really access those like crazy low percentage ones. So 0.35% is pretty reasonable for Australia. Now, over the last 5 years, this index fund has averaged a dividend yield of 5.5%. So that's like the guaranteed money that they've given us back. So if you had $1 million invested with them, they'd be paying you $56,000 a year, pretty much guaranteed. And that's not in like the growth of the stock. So that's not paper money that you have to sell to get. That is, you are receiving $56,000 in cash a year if you have $1 million invested. Now, if you want it to compound rapidly, then you can invest that back, and then you're gonna get like more. So if you had like $100, then you get whatever 55 cents. You invest it back, and over a year that compounds into hundreds of thousands of dollars. The actual index fund has increased by 1%. I've been invested in it for like 2 years, and I think it's gone up 5% on top of the dividend. So for me, over the last like year or 2 years, it's really been like an average of like 12 to 15% return. But over the last 5 years, it's only increased 1% per year, giving us the total return on average over the last 5 years of 7%. Now, that's obviously not guaranteed. And in total, since it was started in 2010, it's increased by 7.67% a year, including the dividend. So it's done really good over the last 12 years. And as I said, it's really like Australia's top stocks, which are really like mainly like mining and banking and all those kinds of things. It's not like tech stocks that are gonna be like trendy, go in and out. So this is like a really, really safe investment that's gonna give you like good, like solid returns. Like, it's not gonna be crazy, but it's gonna give you solid returns for a very, very long time. It's an Australian fund, so you're not investing in foreign countries, so you don't have to worry about currency fluctuation and all those kinds of things either. Unlike our next 2 ETFs. Now, as I said, all these can be bought on comsec Pocket for $2 brokerage fees. Next, we're going to be talking about the NASDAQ 100 ETF by Beta Shares. Its ASX code is NDQ. Currently, it has a brokerage fee of 0.48%, a little higher than the Australian one, but that's because they have to worry about currency fluctuations and all that kind of stuff, because you're investing in the NASDAQ, which is the US tech stocks, okay? Now, for me, this is like, it goes up and down a lot, but it's been pretty crazy growth. Since it was started, it's been averaging 18% a year. Obviously, that's tech stocks. It's been going down a lot. Last 6 months, it's down 14%. Last 3 months, it's down 14% as well. Last month alone, it's down 8%. So I would say it's a pretty good time to buy in. But as I said, last 5 years up 19.76% per year, which means you would have doubled your money in the last 5 years if you had invested in this 5 years ago. Again, it's the tech stocks. This is like Apple, Microsoft, Amazon, Tesla, Google, Nvidia, all those companies that aren't really going anywhere anytime soon. Their growth might start to slow down a little bit. It is an ETF, which means that they're not going to balance the weightings. They're not going to be buying in new tech companies as they rise up the rank, and the whole tech industry isn't going anywhere anytime soon. So it's a pretty solid investment. And last but not least, we have the iShares Global 100 ETF. ASX index is IOO, like 100 but spelled with letters. Once again, this is the world's top 100 stocks. So these are companies that probably aren't going anywhere anytime soon. Last 10 years, average return of 11% a year. Last 5 years, 15% return a year. 0.4% fees, so still a pretty good price, especially for like international stocks. And as I said, it's the world's 100 biggest companies, so it's gonna be a pretty safe investment with pretty good growth. But that's the end of the video. Let me know what you guys think. Let me know what ETFs you're looking at. I'll definitely look at them. There's a lot of high risk ones that I do like geared Australian equities, geared Nasdaq equities, crypto equities, crypto ETFs, but they're a lot higher risk. Like my crypto ETF, I think I'm down 80% on it, but it's alright. I only put like $800 in it. It's no biggie. My other investments made up for it. But that's the end of the video. If you guys enjoyed it, please leave a like, subscribe, and I'm out. See ya.